The real estate market has been treading some pretty rough waters for the last several weeks. Inventory in Metro Atlanta is up nearly 50% year over year. Mortgage rates recently swung more than half a point in just days. And while home prices are holding steady, buyer behavior has shifted dramatically here locally. Hi, I'm Sarah Maslowski with KeyPoint Homes Group, a local real estate agent right here in the Northeast Metro Atlanta area. And my team and I specialize in helping clients just like you relocate right here to Georgia. If you're thinking about buying or selling in the North Metro Atlanta area right now, it is critical to understand the numbers, not just the headlines. So what do you need to know about our current market? First off, there's been a lot of change in the real estate market over the past couple of weeks. One of the big drivers behind this is economic uncertainty, mainly related to the newly announced tariff policies, which sent the market into a bit of a tailspin. Over the past few weeks, it has been a wild ride for a lot of my buyers who were under contract but hadn't yet locked in their interest rate. To give you a little background, if it's been a while since you've bought a home, you might not realize that you can't lock in your mortgage interest rate until you actually have a signed, binding contract on a house. Once your lender has that contract, then you can lock in the rate. Sometimes, depending upon the market, your lender might advise you to wait a few days to lock if they expect good news that could bring down rates. This can come into play if you're buying a new construction home that's not going to be completed for another 45 to 60 days. You need to know that you only get one opportunity to lock your interest rate. Once it's locked, it is locked. Some lenders have programs where if the rate drops by a certain percentage, you can do a relock, but many are going to charge a fee to get out of your locked rate. Recently, right before the tariff policies were announced, I had a client looking at rates around 6.5 to 6.7%, which was great compared to where things had been. Then the tariffs were announced, the markets went haywire, bond markets were impacted, and suddenly that 6.7% interest rate jumped to 7.25%. That 0.5% increase made a huge difference in the monthly payments. One of my lenders said it was one of the worst days for mortgage rates he has seen in over 25 years in the industry. It really goes to show how unpredictable the economy can be and mortgage rates. Even with all the expert advice we rely on, sometimes you just can't predict the unpredictable. Thankfully, rates have come down a little bit since then, but they're still hovering up there in the upper sixes, close to 7%. Earlier this year, we were hoping rates would hold steady in the mid-6 range and maybe even dip into the low 6 range by the end of the year. I don't know if that's still going to happen. Two things are for certain though. Rates haven't come down much and neither have home prices. Prices have gotten a tiny bit better in some cases, but overall things are pretty much holding steady, which can be frustrating for buyers. However, if those interest rates drop significantly, even by just a quarter or a 0.5%, it is going to unleash more buyer demand, putting even more pressure on home prices. So any savings you get from a lower rate, it could be drastically wiped out by paying $10,000 to $15,000 more for the house itself. We're going to look at some data here, but first let's talk about what the experts are saying about mortgage rates. There's a lot of complications right now due to the tariffs. President Trump's announced a 90-day pause on the reciprocal tariffs, which gave the markets a little bit of a breathing room and some stabilization. But there's a big unknown. What's going to happen at the end of this 90-day pause? When the tariffs were first announced, 30-year fixed-rate mortgage rates jumped to 7.1%, a huge swing from the week before. Experts predict that rates are going to move lower throughout 2025, but not dramatically. They're expected to remain around 6.5%, and right now that would be great news. A lot is going to depend on how the situation with the tariffs unfold, but if you're in the market to buy, this could be a sweet spot. There's a lot more certainty now compared to waiting until the tariff pause ends, when we could see another upward swing in rates. Another major conversation happening is about how the tariffs are going to impact home prices, specifically in new construction. The North Metro Atlanta area is a prime market for new builds. If you drive around, you're going to see new developments everywhere. Builders are worried that tariffs could add around $11,000 to the cost of each home, and personally, I think that estimate might be a little low. Homes that are already built or well under construction shouldn't see much change. However, for new builds going forward, just now starting, material cost increases are expected to drive prices higher. Much of our building wood comes from Canada, and tariffs there are adding complications. Thankfully, the home building industry has a strong lobbying presence that could help mitigate some of the cost impacts. Home builder sentiment is low right now, similar to what we saw after the last recession. Builder sentiment matters because when builders pull back on building homes, it directly impacts the amount of homes that we have available to buy. It affects that housing supply. And a lack of supply years down the road leads to higher home prices. It has taken nearly 20 years to get back to pre-Great Recession inventory levels. And even now, we're not fully caught up. That's why home prices have remained so strong. Right now, because interest rates are higher and there are fewer buyers, builders are offering major incentives to buy new construction. I'm seeing offers like $20,000 towards buying down the rate, covering closing costs, or reducing the price, and some builders are doing all three. Some builders are offering permanent 5.5% interest rates, which is a huge compared to current resale market rates, which are hovering around 7%. However, as that material cost rises, builders will likely start drawing back some of those incentives. There is a great window of opportunity for new construction buyers right now, but it might not last. Of course, the trade-off with new construction is that you're typically going to be on a smaller lot compared to some of those resale homes. Still, you're going to get a brand new house, new systems under warranty, and low maintenance costs, and that is a huge advantage. I recently worked with buyers who chose new construction partly because they knew that they'd stay in the area for at least 5 years. We talked about how with a resale home, even if the HVAC system is only 9 years old now, they could easily face a big repair bill within a few years or face problems from buyers when they go to sell because they're going to have older systems. With a new home, they're not going to have to worry about these expenses. On the resale side, we're seeing rising inventory levels and fewer buyers, which is giving buyers more negotiation power than they've had in the past 3 to 4 years. I haven't had a buyer pay full price for a home in nearly a year. Buyers are getting better terms, whether it's price reduction, closing cost credits, or other incentives. The challenge for sellers is adjusting their expectations. Many are still pricing based on last year's market, not today's. I currently have a listing that's been on the market for a month with 0 showings. And the market is clearly saying, hey, we're overpriced. The only thing with this home that we can do is adjust the price. Some sellers are reluctant, like my current seller, but today's market demands realistic pricing. Today's sellers are competing in a beauty contest. Homes must be move-in ready with modern updates and neutral colors to attract buyers. The days of putting anything on the market and getting multiple offers are over, unless you're in a highly coveted school system or prime neighborhood in an area like Alpharetta and you're winning that beauty competition. If you're buying, you now have way more choices than you did this time last year. In the greater Atlanta area, we have about 17,000 homes for sale. That's nearly 50% more than a year ago. That gives buyers the opportunity to be picky. In 2022, there were only 6,000 homes for sale in comparison. Buyers were just grabbing whatever they could get semi-close to fitting their needs. And now buyers expect a move-in ready house and they have the luxury to shop around. And because of the increased pricing, they are being much more critical about what they would even consider offering on. Whereas many folks were writing several offers at a time just to get something to stick back in 2020 and 2021. If you're selling, you need to make sure that your house is updated, staged, and ready to win that beauty competition. Looking at the local data, the median sales price of homes in the greater Atlanta area is pretty much flat year over year. But here's something that's really important. Days on market. Naturally, in real estate, we see homes sell faster in springtime because that's when most buyers are out. That's normal. However, if we look at March 2025, the average days on market was 23 days. And if we look at March of last year, it was only 15 days. So you're almost looking, well, around, 50% increase in time that homes are on the market, taking a lot longer to sell. If you're a seller, this reinforces how important it is to win that beauty competition by making sure that your home is updated, super clean, neutral, and shows well. Another thing we're watching closely is price reductions. We're seeing a significant percentage of homes needing to lower their price after hitting the market. For example, in Hall County, which includes Gainesville and Flowery Branch, about 28% of homes had price reductions in March. In Forsyth County, that's about 30%, and in Gwinnett County, around 26%. Even in Fulton County, which includes parts of Alpharetta, we're seeing more price drops now than what we were a year ago. Now, it's important to note, a price cut doesn't necessarily mean that the home values are falling year over year. What it means is that sellers are having to adjust from overly optimistic list prices to meet the current market demand and reflect the condition that their home is in. Something we can all agree on, though, is that buying a home is expensive. Buyers are raising their expectations to meet these higher price tags, and this is quite the adjustment for many sellers. Like we just talked about, if homes are not in move-in ready condition, buyers are moving on to the next house that is in that condition. They're also paying attention to what the neighbor's house down the street sold for, and they are doing a lot more due diligence when making their offers. If you bought your home within the last 2 years and need to sell, it may be a scenario where you don't walk away with the amount of proceeds you were expecting. Getting sellers to be realistic about what they can fairly make on their home home in the current landscape has been a bit difficult. Overall, even though things feel slow right now compared to 2021 or 2022, in a historical context, this is still a tight market. Home price appreciation is also normalizing. We're no longer seeing 15 to 20% year-over-year growth like we did during the pandemic frenzy, which is hard to get sellers to understand, and it's overall a great thing for the market. That was very unsustainable. Instead, we're back to the healthier 3 to 5% annual appreciation, which is sustainable in the long term. If you're buying today, it's important to understand that you may need to hold on to that home for at least 5 years to build enough equity to make a move profitable. We're back to a more normal real estate cycle, and like I said, that is a great thing. So overall, the North Metro Atlanta market is transitioning towards balance. Buyers have more choices, sellers need to price competitively and present their homes well. And while there's a lot of noise in the broader economy, real estate fundamentals remain strong. So what do you think? Is now a good time to buy or sell? Have the recent changes in the economy changed your plans? Let me know your thoughts in the comments below. If you're thinking about buying or selling or building in the North Metro Atlanta area, my team and I would love to help you navigate this market. You can reach out directly by clicking on the link in the pinned comment below this video. And of course, if you're thinking about making a move to Georgia, you have to watch this video next.